There were several important topics to cover from yesterday, and I kind of have some of them. The air was drawn to them here. Let's talk about this one here, this breakout at the end of the day. So going into the day, my premise was that the market would test up to these highs that we have up here. Now, let me show you on the daily chart what it looks like. So we have these highs up here, and the market has been working up to it this week, the last few days. With yesterday, Monday, the President's Day, kind of had this smaller volume day, but it did close near its high and had this small bull bar. So going into today, I was thinking we are near these highs. We have this bull bar near the top. The market's probably going to want to test up to that to see what kind of orders are there. Let me draw in a horizontal line here. So that's yesterday's high. Now, going into the day at the start, my premise was to look for an early low of the day and then to buy to try to look for a swing up to test that high, to go above yesterday's high. Now, we never did that until the last few minutes. And I just thought it was really interesting that this breakout did occur, and then it found what was up there, right? It eventually does what it wants to do. So going into the day, I thought that we wanted to test above those highs, and sometimes you get this where it takes the whole day until the very end, then it does what you were thinking. Another point I want to bring up about this breakout here is it went up to a measured move from this failed breakout down here. So from these lows, from these lows, then to these highs through here, if you do a measured move up, that puts you right up to where we went. So I drew that from the lows, and then we got this tight trading range. And then when we broke out of that, then I think it's reasonable to try to draw a measured move in this way from the lows to the upper part of that range. And then you often see a measured move up from that. So let me address this first yellow arrow that I have. This is here because we have a triangle forming through here. Now, what triangles do is they'll usually expand. So we can see we had a first triangle here like this. And what it'll do is it'll break out in one way, and then it's supposed to test the apex of that triangle. So when I see this triangle forming, I'll wait until I see a breakout and then a retest of the apex of this middle part, and then I will look to enter a trade. But what happens, especially if the market has been in a larger trading range, like we've been in it for a couple days here, is that this triangle is just a type of trading range. So what happens is the breakout occurs, and then it pulls back to the apex. But then instead of breaking out further and coming way down here or way up here and actually breaking out, the triangle will just get bigger and will just form more of a triangle. And you can see that's what's happening here. So often I will just discredit this first kind of breakout like this, and then I will still continue. I'll still consider the triangle as still forming. And then even this breakout, I felt like that was not sufficient enough of a breakout, and that we would need to see a larger breakout first. So we can see this is the larger breakout. And after that larger breakout, I usually expect it to come back and test the apex, which it does here. That's the thing with triangles and trading ranges, is you see this big breakout and you think, okay, we're breaking out, we're going lower. Well, most of the time not. Actually, most of the time it actually reverses back and touches this apex. So I was saying that after a breakout occurs, it tests the apex and then continues to break out in a direction. So is this the breakout test. Well, it's fairly small. Like I said, I was really expecting something larger, more like this or like this. So when I'm looking at this, is this the breakout test, and then we're done with the triangle, and then we're going to go far in one direction? This is small enough relative to the whole range that this is just a minor breakout pullback. It's kind of like these, especially when I have seen these other breakouts here, and we continue to break out and pull back in the middle, break out, pull back in the middle. It'll probably continue to do that, and then we need a larger breakout. You could also call this a minor breakout. We try to go lower here and then pull back basically to the apex of the triangle again. But these are just minor breakout and pullbacks, and I would not consider the triangle complete until we get a much larger breakout like this and then pull back. Now, the market closed up here, and then overnight, you can see the price is at 61.43 right now at 8 a.m. So the market's probably going to open up around here. Even though it's broken out and tested it, this apex will probably still be important. Right? This triangle will still play out into Wednesday's trading. So today's trading will probably still play out. So especially with this opening within the range, we'll probably see a test down to this triangle. So at this point, is it a test of the triangle, or is it a test of this tight trading range, or is it a test of the beginning of this bull breakout right here? Well, it's all of those things. And it's also going to be a test of the moving averages. It's going to be all those things, but often you'll see if you get a big triangle, it continues to influence the market for several days. Bigger picture, like I was saying, we're in a trading range. So this breakout it's probably going to fail. And then if it tried to break out lower down here, we would expect that to fail as well. Today was a tough day for stop entries. There's a few ideas for stop entries. One is selling below this bar and trying to get a scalp before these lows. That's okay. 3 bars down, probably get a second leg. So after you get this pullback and then these 3 little bars, that's probably as much as you would get. So if I was short here, I'd be trying to get out down here. Another idea is buying above this bull bar, low in the range. It's a possible second leg trap. So first leg, second leg, and then bull bar. And so this is just it's just a typical buy in a trading range. You want to buy lower in the range and try to sell higher in the range. And, every once in a while you're going to get a bad trade where you end up getting stopped out. And so this is a great example of that. It's also a great example of a breakout that fails. Like we're in a trading range, and this is breaking out pretty far below, but then you get bad follow through this bull doji bar. And then there is a bear bar, and it does go below it. So there probably were some trapped bears. Probably some bears were trying to sell here, but the next bar they ended up getting trapped, and that speaks to the trading range. And if you're buying here, I think you rather need to be placing your stop right below. That's probably the best case. I think probably for most people, really for anyone starting out, I think if you're buying here, you should be putting your stop below and not trying to get too fancy and try to manage like a breakout like this. Even though after this bar, chances are it is going to reverse back, which is what it did. But it can get tricky, and you'll think you'll be able to manage it correctly once this breakout happens. But once you're actually in it, it can be tough, and then most likely you'll just end up getting out down here instead of holding on and riding the move back up to your first entry. Another way, if you were long here, you could consider getting out below this second entry short here. And I'll go ahead and mark that as well. So what's good for this short is there's a second entry long that fails. So this pullback, bulls buy here. Another pullback, bulls are buying here and here. So that's a second entry long. The bulls this is their second attempt to buy. Now, when second entry longs fail, the reversal of that can often be quite aggressive. Another thing going for this is it's a second entry short. So first entry short here, pullback, small second entry short right here. So you have confluence. There's a second entry short following a failed second entry long. So that's good for the bears. What's bad for the bears is we are low in this range. So that's going to decrease the chances of that working, because generally you don't want to be buying lower in the trading range. One way to look at this would be double top below the moving average, right? Some might say that this is sufficiently testing the wedge. We've tried it once here and then a second time, even though I would think a bigger breakout would eventually return back up here. This could be enough to get a scalp. So let's say you sell below this bar and then you go for 5 points. It's putting you down here, which is not, it's just a little bit below the range. It's not too far. And clearly that would have been the right way of thinking. And I think this bar here, part of it is the bulls giving up. They bought here. They were trying to break out here. They bought. They're trying to break out again. They bought. And then the market just kept going lower and lower. Some of them interpreted this as a double top, testing the apex. So some of them interpreted this as the complete apex. And then the bulls just exited here, causing this big bear bar. And so if you can read it like that, then that would be a good trade. Although it's perfectly okay to avoid that, because it is low in the range, and that's going to hurt your chances of the trade. What's good for it is, it's below the moving average. What's bad for it is it's above the moving average. So you're kind of stuck in the middle of these two moving averages. And so if you're ever unsure because of something like that, then it's definitely okay to just wait. So Wednesday is probably going to open up somewhere around here. And whenever the market opens in the final leg of the day, that increases the chance of a trading range. And considering we've been in this trading range, and then we're also going to open within this final leg, that a good chance we're going to not go too far today. Or maybe we go below this, or maybe we go up here, but we probably wouldn't go too far. And after there is a big move, it probably wouldn't have very good follow through. So that's what I'm looking at for today. I hope that was helpful for you guys. Let me know if you have any questions. Leave them in the comments, and I'll get back to you. All right, thank you for watching.